Hey, welcome back to Everything Money. We are glad you joined us. Intel fell last week. In this video, you will learn what the heck happened to Intel. We will look at the financials using our 8-pillar analysis. We will use our software to look and separate the financials of Intel from the crazy stock price fall. And if you're interested in trading Intel, we will head over to that gorgeous, handsome Mo, and he will show you how to trade using trading charts on a daily basis. But first, who are we? I'm a normal guy, photographer Paul, and I bring normal people questions to Paul and Mo, a couple guys who maintain a lot of wealth, have a lot of businesses, they trade. They actively have $100 million in businesses, stocks, and real estate, Mexican vacation homes, Paul, and I bring normal people questions to you because I want to know what I want to do with my money, what hell happened to Intel, why we like it so much, and why we look like suckers when the rest of the world is pumping their money into Tesla and Bitcoin, and we keep talking about this boring company called Intel. I present to you Paul Gabriel and Mustafa Hussein.
Welcome, guys. So first off, follow us on Instagram. We have our new Instagram account. Follow us all personally as well. It helps out a lot. So guys, this is our Everything Money software. You're gonna see a lot about it, and we're gonna explain it a little bit later. I'm gonna go to the 8 pillars tab. I'm gonna type in Intel, click on it. Okay.
Now, let me cut you off, Paul. Today is Tuesday, October 26th. Last Friday, I saw a text between Mo to you in our group chat, and it just said, Paul, Intel, and just like confetti, and like,
exciting that the stock fell.
Exciting. And I thought, oh my gosh, Intel's exploding. And then I look and Intel's down 10%. And the young new investor in me, it's still been doing it for a decade. I'm like, oh no, I love Intel and it just fell. This is terrible. And then I had to wait a minute now. Paul, tell me why I'm excited now.
Guys, you're excited because I always tell people, this is a very common thing, Warren Buffett talks about it. Whenever I say I want stocks to fall, people are like, why? I say, okay, what's your favorite thing in the world to buy? Every once in a while, some idiot will say, oh, I don't like to buy things. I just like to, okay, whatever. But the whole point is, you have something you like to buy. Do you like to pay more for it or less for it?
Yeah, less.
That's it. Very simple. I like to buy investments. I like to buy stocks. I like to pay less for them. What I want to do is differentiate the stock price from the company financials.
Yes.
That's what we're doing here. But one of the first things I want to do here, Seth, this is what we talk about in many videos. This is Intel's stock price from 1987 or so. In 2000, the stock hit 75 or 80 bucks. Since then,
oh my gosh,
the revenue has tripled, the profits tripled, and look at the stock price. It still hasn't reached its 2000 peak. It's at $48. So if I told you back here, after you saw this parabolic rise, that Intel was gonna be 21 years later, it was gonna be almost half the price, you would have said, you're crazy, Paul, you don't get it. This company is different, it's going to the moon.
This is a tech company, their profit margin's incredible. This is going to the moon, right, to the moon.
And now look at it. So what we're gonna do now is we're gonna start looking at the analysis of the company.
Market cap.
First off, $200 billion market cap. 5-year PE, we want the 5-year earnings in the company to be less than 22.5 multiple of its stock price, of its market cap. It's 10.78, that's a check mark. It's less than half that. Next, 5-year return on invested capital. We want it over 9%. It's 12%. This means the company does a good job getting a return on the money invested in the business through debt and equity. This is awesome. They are returning very good numbers on their capital that they raise. Guys, look at this profit margin. 27% bottom line margin, 56.3% gross margin. Now, Sethy boy,
yeah.
What do we have here?
Oh, look at this little dividend.
We have ourselves a little dividend.
Cute.
2.8%.
That's
5.6 billion. Now, guys, here's the deal. Everyone out there thinks that dividends are this safe and secure thing. But the reason you're on this channel, the reason you're using our software is to understand that dividends are not always secure. You want to compare it to the free cash flow because the free cash flow is what they use to buy a dividend. Luckily with our software, our exclusive software, all you have to do is go 2 lines up. The 5-year average free cash flow, $15.7 billion. Last year's free cash flow, $17.33. And they paid $5.6. They can easily afford this dividend. So not only do we have 2 check marks on our first 2 pillars, we also have a very secure dividend here. Does that mean it's gonna be around forever? No, but it's very secure. A lot of bad things have to happen for them to take away this dividend.
Stay tuned. We will show you using our stock analyzer tool how to price up the Intel stock, and we will head over to Mo to trade. But Paul, show us that pillar number 3, which is revenue growth over the past 5 years.
This dying company that nobody likes anymore has had a miracle occur.
Go on.
Revenue growth. 62 billion to 78.5 billion. Last year to this year, 78 point. And guys, this was supply chain issues. They can't make more chips. They missed their revenue. The reason the stock's down 10% is they missed their revenue. Why? Because they can't make more chips. They don't have supplies.
What's with this high voicemail? Where's he going with this? This guy's on fire today.
I just look at
the
this.
Lord is speaking to him.
I have exorcised the demons.
Paul, one show we should just get people up here and you you put your hands on them, they fall over. Remember that? The old church. Keep
Guys,
going.
pillar number 4 is net income growth. We want to see 5-year net income growth. 5 years ago, 13.85. Last year's dying company, 21.1. Okay, pillar number 5.
Shares
guys,
outstanding, Paul.
This is the often most overlooked item and one of the most important. We want to look at shares outstanding. If the company is cheap, which on so far the one metric of PE, 5-year PE, looks very cheap, we want the company buying back shares. What that means is it gives you a larger percent ownership on the shares you own. Because all it does is decrease the number of shares outstanding. So if you own 100 shares out of 1,000, as they decrease the 1,000, you still own your 100 shares. But let's say it goes to 800. You now own 100 out of 800 shares, which is 12.5%, versus 100 out of 1,000, which is 10%. So they're doing you a favor. So we scroll down to the bottom of our software income statement. 4.69 down to 4.06.
Hey.
And 10 years ago, they had 5 billion shares. They're down 20% shares outstanding in the last 10 years. That's incredible. They've increased your ownership by a ton in the last 10 years. Okay, so far we have all checks.
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow.
So what I do here, guys, is I go back to our main page on our software. I look at the 5-year average free cash flow, 15.7 billion. I multiply it by 5. That equals $78.5 billion. So what I want here is I want to go to the balance sheet on our software, on our exclusive software. I want to make sure their long-term liabilities are less than 78.5. So what do? I scroll here, go to our balance sheet, scroll to the bottom. Praise the Lord, guys, 48.3 billion. So we wanted it to be under 78.5, it's 48.3. So what this means is the 5-year free cash flow is 15.7. In about 3 years, if they wanted to, they could take all their free cash flow and pay off all their long-term liabilities.
Check, please.
That's incredible. Another check mark there.
Yep.
Now, guys, our biggest and most important metrics are right here. Cash flow. I love cash flow versus earnings because earnings can be manipulated through tricks that CEOs can use, SEC rules, accounting rules. Cash flow is much harder to manipulate. You still can, but cash flow is used to buy back shares, pay dividends, pay down debt, and make acquisitions. And it's very easy to calculate, especially for our exclusive software. It's cash from operations less your capital expenditures. Now, we're the only software that adds this line at this point in the software. Most other software has it elsewhere. We make it very easy. We add it right here. 11.78 to 17.33. Now, I will say, Intel has warned they're going to decrease their cash flow because they're going to reinvest back. They're going to increase their capital expenditures a ton.
And that's fine to me.
That's
because
fine
they're
with
trying
me.
to compete in the industry. They're trying to grow.
They're trying to grow and get more and solidify their market share because people say AMD is taking them over. Okay, that's been a storyline for the last 20 years, by the way. Now, so that's a check mark. And our final metric, guys, very simple. We want to figure out some sort of level of market cap for the company.
Yes, if we're buying the company as a whole.
Correct. So we take the 5 years of free cash flow, which again is given you in this exclusive software. We multiply it by 20. That's always our number we go to. Is it right? Is it wrong? There's many factors in there, but we start at 20. 15.7 times 20 is 314. Is that right? What am I doing? What's 300? What's 20 times 15.7? Yeah, $314 billion.
You're right, 314.
So we want the market cap to be under 314. Guys, it was 194.
Oh,
it's a check mark.
gosh.
They did.
So you might think Intel's dead. That's fine. But I will say to you, all of its attributes seem to be a very lively company. That's like going to the doctor at the age of 50 and somebody telling you you're dying, you're dead, and you have low blood pressure, low cholesterol, you can run a marathon, and all these things, and go, huh, how dead are you? So we go to the 8 pillars tab to make it easy for all our software people. Boom, all 8 check marks here.
Check, please.
It shows you this right here. You can skip all these steps. Just go. Now, guys, this software was created because our users said, how are you doing this so quickly?
Yes.
So we created the software, we offer it to the users. We have over 6,000 people who currently buy the software. It is a no-brainer. You get everything you've seen here, plus news, plus stock analyzer tool, plus so much more that's coming right here. All of this is going to be included in the software. And how much is it? It's only 90 cents per day. This is literally going to change your life, make you, if you just get 1% return extra a year because of learning from this, you get exclusive content, you get access to all of us, you will literally make hundreds of thousands, if not millions of dollars extra over a 30 or 40 year period by having this software. It is a no-brainer. It is absolutely easy. If you're serious about your financial future, this is the best decision you can make. Now, once Mo is done with the charts, we're gonna go to our stock analyzer tool. This is one of the best parts of our software and the most popular. It will allow us to make our assumptions, and it'll tell us precisely what we need to pay for the company today to hit our return goals.
If you're interested in trading Intel at a quicker pace, Mo, what happened a couple days ago, and what would you have done to catch this on a daily chart?
So you want to see the daily chart first, let's go there. So to me, I don't like trading earnings. That's just me
you
personally.
said this a ton, right?
But what I'm not opposed to is after you get a big gap down like that, and your stochastic is moving down like this, you're getting a lot of selling volume coming in there, go ahead and short this thing. I mean, I would be shorting this thing on a daily chart today. You're coming down through the sweet spot. You have a great engulfing candlestick down. The volume is pretty good. I mean, it's only 10:41 in the morning and you're almost at average volume. So this is a really good looking short. Now, if you don't want to short anything on a daily, let's look at the weekly, because I know a lot more people are interested in that with Intel. So I'm just going to zoom out and go back to 2019. And right now, with where their stock price is, let me see if I could draw a line. I am seeing a lot of consolidation there. A lot of consolidation happened there. A lot of consolidation happening. This is $48 right here. So to me, I'm looking at this saying, I don't really think that this is going to go any lower from a long-term perspective. To me, I would wait on this, let this thing get down in the sweet spot, turn back up, and make a move towards $60. But better yet, I mean, I sent this to the guys the other day. I said, I think that Intel's going to drop more after Friday, and it certainly has because of past history of what they've done on earning dates. So I found a pattern there. So if this speaks to you, come join the Bid and Ask Nation. Learn how to do this. You get all my training videos, all my seminars. I'll be doing one next Saturday, and I will get that out to you as soon as you join for only $1.50 more for software, everything included.
Paul, walk us through the stock analyzer tool, how we price this stock in terms of assumptions moving forward.
Okay, so guys, with the stock analyzer tool, the first thing you do is choose years of analysis. Then you choose how many assumptions you want to make. I choose for established companies just 2 assumptions, low and high, okay? Revenue growth. It gives you your 1, 5, and 10-year revenue growth numbers. 0.5, and I just put in low assumption of, let's say the revenue stays the same for 7 years, guys. It just stays the same. So as the world develops and more chips are demanded, I'm going to say Intel doesn't get any market share. They actually lose market share. Their revenue stays exactly the same. That's a pretty low assumption. Share change. Low end, minus 1%. High end, minus 3%. Profit margin. I'm going to go, hey, they have to compete. They're going to decrease their profit margin. 20 and 23, which is lower than they've ever had in the last 10 years. Free cash flow margin, 19 and 22. Again, lower than they've had. PE. This company's dying. Low PE of 10, high of 15. Same with price of free cash flow and desired return. Guys, I don't want a 10% return, which is the market's done over the last 150 years. I want to, if I'm going to be a value investor, I want to get a premium to my money. So I want a 12.5% return. I hit the analyze button. Guys, look at this. Low end, the stock is worth mid-30s. High end, 70, close to 70. So I look at this $48 in between going, that's probably what I want to pay for the company. And I am personally buying shares and selling puts at $45 to $50. So you can use this as a way of making your assumptions. Because remember, guys, every investment is the present value of all future cash flow. This software does it for you. It's a great way to make your assumptions. Let's change our assumptions a little bit. Let's say they take more market share on, 2 and 5%. They buy back more shares than we thought. Their margin stays the same. If not, it grows a little bit. Same thing with free cash flow. And let's say the market all of a sudden loves them. It's a buy all day. And I don't think by the way, these assumptions I put up here that I changed to are not crazy assumptions on the high side. They're very reasonable assumptions. So it just goes to show you how much Intel is a value play right now. Even the company staying the same, you could still justify its price today and get a reasonable return on your money.
And when it comes to saying that they're a dead company, this is a perfect time. We usually talk about separating company from stock price on the high side with crazy price stocks. This is the same thing. You looked at all the numbers just now, and you notice that every single thing is growing there. This is exactly what Jeff Bezos said in 2018 or 19, whatever he did that interview. He said, I looked at the declining stock price on Amazon, then I looked at the increasing financials, and I said, well, there's a divide here. Everything's going to be okay. That's exactly what we're seeing with Intel.
And as they
right
buy
now.
back shares, you're going to divide the revenue and profit on lesser shares, and eventually people say, wait a second, I can buy the stock for $48 and it's going to make $5 per share per year. I'm in. Eventually that will happen because as they buy back shares, even though the revenue and profit, in fact, cash flow stays the same, they're going to be dividing that all up by less shares. So therefore, the per share revenue, profit, and cash flow will increase, and that'll drive the share price up.
And for those of you that are going to go in the comments and say, Intel lost Apple, Intel lost Apple, Apple was 1% of their
No, I think it was
revenue.
more than that. I think somebody told me they did research, it was like 2 to 3%. But the point
2
is,
to 3% of their revenue. That's
Okay.
it. They're fine.
they fell 30% for a 2 to 3% drop in their revenue.
Cool.
Nice job, guys.
Yeah, while the rest of the world is YOLOing into Tesla and Bitcoin, you're welcome to the boring world of value investing in companies that look foolish. That's right where we want to be. And if you're you, I try to represent you out there. I try to emulate guys I really look up to, and these are the guys that I'm following in terms of investments, looking to be wealthy, obviously, and this is who I'm surrounding myself around. So if this speaks to you, keep watching the channel.
Seth,
Join
I'm
our
going in
community.
right now and buying shares of Intel.
No puts. You're
I'm just going to buy
because it's just down so much.
$100,000.
100,000.
Yep.
Oh well, jeez. Okay, I was gonna buy like a.
Putting my money where my mouth is.
That's true. Wow, Mo, that's good for you. Fondle thumbs up. Talk about it in our community. See you in the next video. Thanks for watching.